Hello Oracles. Well, Tesla China insured vehicle numbers just came out. If you guys do not follow Moneyball over on Twitter, if you are there, you should do so. He gets out all of the information when it comes to the insured vehicles and other information from Tesla China. Very good to follow him over there. And so the numbers that we got coming out of China are 11,670. Now, Troy Tesla had pointed out that 12,000 vehicles being insured would have been expectations, 14,000 would have been great, and 16,000 would have been excellent, well beating the expectations. However, we came in at the 11,670. That is just below meeting expectations. What does this mean? Does this mean that something about the production rumors we had gotten yesterday are potentially true? Maybe it's just not 20%. Maybe Tesla is going to be cutting production slightly just because they do have over there a significantly bigger inventory than in other areas of the world. Some discussions we have been having are, well, they can export. There are a lot of other places they can export vehicles to when it comes to China. This is true, but at the end of Q3, they did talk about how the logistic expenses that they have when it comes to trying to push out that delivery wave at the end of the quarter is very expensive. We know that shipping costs have been coming down from where they were earlier in the year, but when you're trying to do a lot of things last minute and do a lot of logistical cramming in here and there, that tends to bring the price up significantly, where you're now paying 2 and 3 times what you normally would for a shipping container just because you're trying to get it last minute. So again, we still don't know. Tesla China did come out and say that that rumor was false information. Again, we go back to that September 30th timeframe about the price cuts over in China. That did end up coming to fruition 4 weeks later. So is this going to be the same situation where maybe they weren't going to? My thoughts about the rumors are the fact that maybe they weren't so much rumors as they had seen some of the demand with the insured vehicles coming through, recognized this, and there was maybe some discussion about potentially cutting back on production to lower some of the costs for the end of the year, thin out some of the inventory, and they know that they can get back up to ramp speed very quickly, so maybe they just do this for the next 3 weeks and then start back up again at the beginning of the year. Just my thoughts, I don't know. Again, we have no other confirmation other than Tesla China saying this was false information. We'll see how this plays out. I've been discussing a lot with you guys. Don't want to harp on it that much more, but with insured vehicles coming in a little bit below expectations, I'm wondering if there was a little grain of truth to go along with that rumor that we had gotten yesterday with production getting cut, and maybe it's just not 20%. And now again, this is something that Troy Tesla himself said that he's going to be monitoring as we move forward to see if it's something logistically possible. He said it potentially holds weight just because of the issues that we're having over there, with the economy itself. It's not so much that Tesla's demand is down, it's more so that the entire Chinese economy is slowing down. So it's an overall demand issue versus a Tesla specific issue. So that could be part of the reasoning that's going on. Again, we will just continue to track this as we go forward. And again, based upon what Tesla China told us, this was not going to be happening. So we'll just pay attention to it. But when it comes to these logistics we were talking about at the end of a quarter, one of the things I thought about again was when we were talking about yesterday and Elon talking about some cargo ships being electrified, thinking about when we get to that point where we do have that lower priced vehicle that is coming out and China is most likely going to be the one creating it, they're going to still be the main export hub. Well, when you have demand for a vehicle like that, that's going to require significantly more shipping containers and more cargo ships to get all of these vehicles out. So timing-wise, if Tesla is working on an electric motor that they can use for a cargo ship, it would make sense logistically in the next 3 to 5 years if Tesla had their own cargo ships, because then they'd be vertically integrated, and when the costs are going to go up significantly because their demand that they have for cargo ships is going to go up significantly, they will be able to supply themselves with this. Again, we're seeing that with the semi right now. They're already talking about how they're going to be utilizing their own semi trucks for logistical purposes. This would make a lot of sense with cargo ships as they get to the point where they're going to be tripling, quadrupling their exports coming out of China in the next 3 to 5 years. And one of the things that we know that Tesla does extremely well is recognize bottlenecks where they have them coming up in the future and working around those ahead of time. So one of the bottlenecks that they could have potentially seen was some of the export challenges that they may have coming up in the future. By having their own cargo ships, this would eliminate all of that bottleneck. very similar to the lithium refining that they have been talking about. We still have not gotten any details as to whether they have confirmed that or not. But when they see that there is an issue, if there is nobody out there who is going to resolve that issue, they are going to do it themselves. This export issue could be a challenge for them in the future. They don't want to have to get to a point where they're producing enough vehicles and have the demand for those vehicles and just not be able to get them to their customers because they don't have the exporting means that they need. So this is another bottleneck that they may be resolving themselves in the future. So now sliding over to the macro a little bit and how we're going to see some uncertainty this week. This Friday, we do have the PPI, that is the Producer Price Index, that is coming out. We will get that at 8:30 a.m. Eastern Time. Then on Monday, we are going to be getting the CPI, and then on the Tuesday and Wednesday of next week, we will be having the FOMC meeting with interest rates going up. As of right now, we are expecting a 50 basis point hike when it comes to the interest rates. So this is something that the market is expecting. My guess is we're going to have a bit of uncertainty over the next week and a half leading into this, and then we'll wait and see what the Fed has to say. Again, when it comes to all these FOMC meetings, we've seen sometimes we'll go into the meeting, we come down, Jerome Powell speaks, stock goes back up again. It's been all over the place, very hard to predict, so we will just pay attention to what it comes out with. Again, the expectations are 50 basis points. I think what we're going to be waiting for is the language that Jerome Powell is going to be using. Now, what we have seen over the last 6 months is he's been saying the same exact thing every time he comes out. Sometimes he just says it in a hawkish manner, sometimes he says it in a dovish manner, but the underlying facts that he's talking about and all of the timelines have been all the same and they have not changed. And as of right now, their stance is that they are going to be doing the 50 basis point hike now, and then they're going to monitor and wait and see. We're kind of going into that wait and see mode after this meeting. So they'll take a look at the data, they'll do their 50 basis point hike, and then as we get into January, they're going to just take a look at the data. Maybe we don't get a rate hike at that point. Again, this is something that Jerome Powell is waiting to look at. And it seems like their current plan right now is we're just going to kind of stay steady and hold without any rate hikes, but with a higher interest rate for the next year. And it won't be until the end of 2023 or the beginning of 2024 that the Fed finally does end up pivoting. Now, if you guys remember the chart that I had put on here about how the stock market reacts to a Fed pivot, usually we have a nice little climb going up into the actual pivot itself. Again, this is the market looking 6 months ahead. So they're anticipating 6 months ahead, the Fed is going to pivot, so the stock market starts to rally into it. Then the Fed pivots, we get a sell the news situation, we then come crashing down, and then we have a V-shaped recovery afterwards. Historically, that is what has happened every time the Fed has pivoted in the last 20 years. So we will see if that is what happens this time again, but this is leading me to believe that we are going to be going into the next 3 to 6 months kind of trading sideways, maybe down a little bit more. We will then get a rally for 6 months going into that anticipation of the Fed pivoting. Then we will get that crash afterwards and then the V-shaped recovery to bring us back up. At that point, it will come down to what is the economy actually looking like to see if we then continue into a bull market or if we're going to pause again and wait to see what is going on if the economy has not recovered the way the Fed expects it to. And during this time, over the next 6 months, I think Tesla stock is going to end up trading very much like we have been seeing it lately, which is we may pull down a little bit more, a lot of manipulation thrown in there, a lot of great fundamental news not moving the stock in a positive manner whatsoever. Maybe it does move it up incrementally, little bits here and there. That's really all we're most likely going to be seeing just because the macro is still outweighing Tesla-specific news at this time. Again, there's still a lot of other factors that are out there when it comes to Tesla specifically. Twitter is one of those things. Again, now we're having the insured vehicles coming out, which are just below the expectations that were set at 12,000 vehicles. So maybe that is going to raise some more of the China demand concerns again. We're probably going to be hearing more about that over on Twitter and around the news today as well. So just pay attention to these things as you guys are out there reading the news. Don't just take a look at the headlines. Take a look at the entire articles and what's going on. And again, if you guys are long-term investors, this is going to end up being short-term, near-term noise. That is my opinion. I don't think any issues that are going on over there are going to be any major long-term concerns for Tesla itself. It's just going to be something we need to work through. We know Tesla has a lower priced vehicle coming out. We know that Tesla can still come down on their prices if they need to. This is what pricing power is all about. We've been talking all year long about pricing power, and now Tesla has the ability to use it. Of course, we never wanted them to have to use it because of demand concerns, but we knew that with production getting ramped up even faster, they were going to be able to get out more vehicles even faster. So this was the whole point of the pricing power, is they can come down on prices with the exact intention to be able to bring demand back up again. They still do want to come down on their prices. That has not changed. And with the costs coming down to produce all of their vehicles, that means that they're going to have even bigger margins. So if they do come down on prices, it's not going to hit their margins as much. This is something we're definitely going to be paying attention to when we get to Q4 earnings, is their margins. Can they get back to that 30% margin level? With prices coming down in China in October, I don't know if they have that same padding. That's where we are going to get into, where are the costs? Maybe this is why they are going to be smoothing out the wave. They don't have all of those extra costs going into all of those shipping containers at the last minute. It's the extra costs on top of things. Running with normal costs, not a big deal. Having to pay extra just for the same thing may not be worth it for them. This is something only Tesla knows, and we will find out on the Q4 earnings. Again, going back to the production rumors, maybe it's one of those things as well. Perhaps it's, as one person had mentioned to me earlier, was, when they're coming to their shifts over in Shanghai, they're 9.5 hours. That's quite a bit of overtime that they are paying. If they come down on production a little bit, that means that they may not have to pay as much overtime to their labor. And overtime is very much like the end of the quarter shipping costs, where they're paying a lot more for the same production that they're getting out of it. So to be able to just pay them straight time to get other production might be worth it. And again, because they have proven that they can ramp up very quickly, they might do that for the last few weeks of the quarter, and then come January 1st, get right back to full production. Again, this is all just speculation, things that I am just kind of bouncing around in my head with all the different questions that I ask. But you guys can let me know in the comments below what questions you may be asking yourself as well, as to what could be coming out of this. So do you think that these insured vehicle numbers are going to be a concern? How do you think the media is going to sway this today? As of the time of this recording, I had been watching, and we went from 0.5% up to now flat. So I don't know if the stock is moving because we had just gotten this information on the insured vehicles. Again, you guys can let me know, and my tinfoil hat theories on why we had seen that article yesterday again is, maybe they had known these numbers and the demand was a little bit lower than expected. Somebody inside Tesla had this conversation about, maybe we can bring down production a little bit strictly because we don't have that same demand right now. And they were going to do this to be cutting some costs, knowing that we had this coming up. Now we get the insured vehicles kind of reinforcing that theory. Again, this is my tinfoil hat theory as to why we had heard this yesterday. But either way, I don't think this is going to matter in the long term. So you guys, again, let me know your thoughts in the comments below on all of this. I was trying to avoid getting back into those production rumors from yesterday, but seeing the insured vehicle numbers coming out based upon some of the theories I had in my head about this, I just wanted to reiterate it to you guys that there may be a grain of truth to it. Troy Teslake and some others seem to think that there might be a little bit of truth to it as well. Again, we just need to wait and see on this, and you guys can let me know your thoughts in the comments on it. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.